Facebook, we are live. Hope you're doing well. First one of the week. Hope you had a good weekend. So, what am I talking about today? Now, this is an interesting one because I had an email into support. So, anyone, free member, paying member, can email us. Obviously, our priority goes to our paying members, but anyone can email us in, send us a question via our Facebook group, and just basically ask for our help. And this guy was having a losing run, and in his email, what he said is he said that he couldn't get any traction on what he was doing. So he said, I had a strategy that was proven. Well, that's a whole different subject. I went through a series of questions because a lot of people say they've got proven strategy or strategy that works, when in fact, the way that they're assessing whether that strategy is proven and whether it works actually is incorrect. But that's for another video. So I gave him some ideas on how he could turn the losing streak to his advantage. And his first comment back was, that's really weird. And it was weird to me that he said it was weird. And what I realized was what was happening was that what's normal to me and what I do as a natural process and what our guys do in our trading room when they're having a losing run, what feels natural to us is actually very weird to somebody else. So what seemed like a weird response to me, well, actually was weird in terms of what advice I'd given this guy. And the challenge in scenarios like that is if the person is essentially completely new to what you're telling them or doesn't really get it or goes, well, this is weird, the risk is they don't follow through. And that's why the guys in our trading room do so well, because initially some of the advice that I give them can feel and seem very left field, but when you actually use it and when they see the effect it has on their results, it feels less weird and it then just becomes part of their routine. So today we're looking at weird but effective ways to turn your losers to your benefit and basically get into a position where you can use those losers to your advantage. So first one here is this. I'm just going to adjust this a little bit because I'm getting a little bit of funny colour on the screen. So first and foremost, ask questions. Doesn't seem that weird, but for a lot of traders, two things happen. When they have losing trades, they sweep them under the carpet. They very much forget about them, ignore them, say things like, right, well, I'm starting again now. I know I made a mistake. I'm starting that trade. I'm starting again. I'm pushing these aside. Or they don't feel either through something like our private Facebook group or talk to other traders that they can admit or ask questions about their losers. Often traders are very good at moaning about their losers after the event. So they end up losing 50% of their account. They're over leveraging on trades and they'll say, yeah, it didn't work for me. And they end up moaning about their situation rather than being proactive and ask questions. So it seems pretty obvious, but actually for a lot of traders it can feel very weird to ask other traders about what they could do or ask other traders a smarter question. Rather than simply moan about the fact they've had losing trades, what they could do is actually say, have you been in this situation? Is this something that has affected you? And then as a result of that, potentially get some feedback and see whether or not there's a correlation between what another trader went through and what they went through. So first one is asking questions. Second one is trying to look at your trades from a long run perspective. And we have a concept that we use and I teach my traders to use, and it's a visualization technique where I get them to think about their trades in terms of a horizon. So you can do the same. So what I get my traders to do, regardless of whether they're having a winning run or a losing run, wherever they are in the process, is before they place the trade, is imagine that they're sat on a cliff top looking out to sea, looking out to the horizon. And essentially what that trader does is that trader will look at the horizon, and I want them to imagine that each individual trade throughout their 20-year, 30-year trading career is a tiny little dot on the horizon. And what that does psychologically is it gets them to put that trade into perspective. Because it's very easy when you're in a trade and it's not going the way you want, or it's approaching your stop, or you've just had a couple of losers, is to make that trade bigger than it actually is. So the idea is that you sit on the horizon and you see that trade in the distance. Now, prior to placing the next trade, what you have to do is you have to bring that trade right to you or go to the trade, do the analysis, go through the process, but then you have to detach yourself from the trade once the order is in, once the trade is running. Now you can go back at the end of the trade, bring it back close into you, go to it, or bring the trade to you and analyze that trade and do a forensic analysis of it. But once you've done that and you've got what you need, the trade goes back on the horizon. Because if you think about the number of trades that you will place over a 20, 30 year period, even as a position trader, each trade is a tiny dot on the horizon. So this is a really useful concept to give yourself some perspective, especially when it feels like the trade is close and emotionally it's affecting you. And then another one that we get traders to do is this concept called force the opposite. And this works whether you're on a losing run, a winning run, whether you're feeling bored because you haven't had a lot of trades come in, or you're placing trades but you're getting kind of winner, loser, and it doesn't feel like you're getting a lot of traction. So anytime you are feeling anything other than a neutral state, so any other time than you're feeling anything more than a neutral state. So for example, you're feeling overly excited because you're on a 6-trade winning run, or you're feeling a bit despondent because you're on a 3-trade losing run. Anytime you can feel your emotions or the voice in your head starting to say things that is out of balance, is force the opposite. And this actually works very, very well if traders are on a winning run, because the risk in that scenario is a trader's going to get cocky. So what I say is, once you start feeling yourself getting cocky, you're a bit more loose with your analysis, it feels like anything you do is working, and immediately at that point, imagine the losing run that's coming and prepare yourself for it. And vice versa, if you're on a losing run and you're feeling despondent, force yourself to imagine the winning run that is coming. Now in the early days, this is hard for traders because, again, like I've said, the trade is close to them and they're living more about the trade they're in now rather than the perspective. But if you combine this with the horizon concept and you combine this with thinking long term, this is a really useful tool. So I do this when I expect a trade to win. Now and again, I'll be in a trade and the analysis is spot on. I've got even more supporting evidence and I can feel myself almost as a result of that, seeing the trade as a winner before it's actually won. So in that scenario, I force myself to imagine the trade losing. Not sitting there going, oh, I hope it doesn't lose, but I force myself to think, just because this trade has got lovely technicals behind it, everything's setting up perfectly, I force myself to imagine it losing if I am imagining it winning and I'm thinking about that too much. So that's another one that I do. Another process we've got is we call it the green tick, red cross. So the idea of this is where you evaluate the trade that you have placed. So you go through your process, you place the trade, and this doesn't necessarily work quite so well for day traders because the time between placing a trade and getting out of your trade can be very small. But for a swing trader or position trader, this is a really useful tool because what it gets you to do is place the trade, go through your process, step back, and this can be an hour, 2 hours, or maybe even the next day, and then you re-evaluate your process. So you go through your reasons for placing the trade, you re-evaluate your analysis, and essentially before the trade result is happened, so before the trade wins or loses, you have to give yourself a green tick or red cross. Now very simply, the green tick, you get a big piece of paper, the green tick is there to define a trade where you've gone through the exact process you need to, you've followed your discretion, you've managed your risk correctly, and at the point of placing your trade, your mindset was in a balanced state. And if all of those factors are in place, green tick. If when you evaluate what you've done, you over-leveraged, you skipped a step on your trade, you made a mistake, you give it a red cross. So what that means is at the end of the month, end of the week, end of the quarter, you evaluate your process based on your process. So you evaluate your trades based on the way that you approach them. So what you have is you have the actual result in terms of return on investment. Again, not pips, not points, because this is not how you measure, but return on investment. But then next to it, what you do is you've got a process evaluation and you can compare the two. And what you'll start to realize is, let's say 1 month you get a 8% return, you have a really good month. What can happen is you can have an average process that month, or you could have made a couple of mistakes, but because of the way the trades have landed that month, you still had a good month. And then you could have a 2% winning month, an okay winning month, and you did everything right on every single trade. So it doesn't necessarily correlate over that short term, but over the long term, what you'll start to see is a correlation between your process and your results, assuming that your process works and your strategy has an edge. So that's the green tick, red cross concept. And then you've heard me talk about this a lot in other videos, but you must have data comparables. So you must be tracking your live trades. You must have tested data to compare. So it's a weird thing for a lot of traders to do, because what they'll try and do is they'll try and out-trade the previous trades they've placed, when in fact, what you want to be able to do is get some perspective. So whatever you're going through, winning run, or as we're talking about here, losing runs, you can compare that. And I've talked a lot about data comparables before. Another one, weird but effective, is journal. And the idea here is not just write down the data of the trade or download your results from your broker. I hear people say that as an excuse for having data. They'll say, have you got any data on your trades? And they'll say, yeah, I've downloaded the broker data. That's not the data that you need. You have to be diligently filling out your spreadsheet with specifics that you can measure. But on top of that, a very effective one is to journal. I like to, if my mind is out of whack, I have a very direct journal process that I do every morning. But journal your thoughts before you sit down to do your analysis. Journal your thoughts when you're going through your short list and you're looking to place trades. So journal pre-trade. If you're in trades, journal during trades, or just journal every morning and note whether or not it's when you're flat or whether you're in trades. Because some people will place trades differently if they've got trades running versus how they place trades if they've got no trades running. So journal pre, during, and very importantly, journal post-trade. So when you're going through and reviewing your trades, or once you've had a result on a trade, all right? So I would say they are probably 5 or 6 really weird to some people, but effective ways to bring losers or make losers benefit you. Ask questions, use the horizon theory and have a longer term perspective. Force the opposite when you feel yourself getting too emotionally distracted in either a positive or negative way. Use the green tick, red cross idea to get a process, refer to your data and journal from an emotional perspective as well. And on the note of asking questions, remember, if you're listening to this and you're not a member of Trader Support Club, head along to our website, tradersupportclub.com, click on one of the Start Right Now buttons, and what that will do is allow you to have free access to our training material, but most importantly, it will give you access to our private members forum, private members group on Facebook, where you can ask questions and where I'm posting up market commentaries you can see about events that we've got going on as well. If you want to work with me and my team on a more personal level, we have different trainings at different levels. They start at £197 and work all the way up to working with us one-on-one. That's our 28-day kickstart, our Total Trader program. If any of those, or working with a trader on a more close basis, getting feedback from us for over 15 hours a week, if that interests you, get in touch. DM Trader Support Club, send us an email to support@tradersupportclub.com. Just get in touch. So trade safe, and I will be back in touch with you again very soon.